issue that the MPC has discussed, has analyzed, has looked at. As we've indicated, you see it in the minutes, you see it in our monetary policy statement, the biggest risk to the forecasts concern the referendum, not just about the sort of fog of uncertainty around the data in the near term, that level of uncertainty, but the fact or the judgment that if there were a vote to leave, that would have material consequences for both growth and inflation, and therefore affect the stance of monetary policy.
So he's saying you probably should stay in the EU, huh? What was that rate, eh? Yeah, leaving the EU could be risky. Could be a rabbit, could be. Yeah, what was that rate, eh? Let's go. Hey, welcome to Forex.Today. Let me remind you, trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. So please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Right? Let me remind you the purpose of this webinar is education. I'm not here to make trade recommendations. However, I will conduct technical and fundamental analysis, and I'll do so in real time, pip by pip, candle by candle, with the overriding goal of helping you put together trade plans throughout this New York trading session. If you're trading along with me using a demo account, then regardless of whether your plans are successful or not, you will have an opportunity to learn. You guys remember that? That was my disclaimer years ago. So, stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. How'd you like to say that every day for 10 years? And then the government sat down with me and said, hey, guess what? They need to be able to read the disclaimer, not just hear you. I'm like, well, that's stupid. Americans don't know how to read. Come on, 50-year-olds sitting around, drink beer, and watch cartoons on TV. Come on. But anyways. Yeah. So anyways. Boop. Hello. My name is Wayne McDonell. I'm the Chief FX Market Strategist for TradersWay. We're a broker. You're a currency trader. Let's fall in love. Tell you what, you make good trading decisions. We'll execute your trades promptly and affordably, and together we'll have a beautiful relationship for many years to come. Now, the reason I do these sessions is I do want to share my many years of experience with you in the hopes that you can develop the proper skills and trading habits and earn confidence so that maybe one day you will trade real money and you will pay it back by choosing us as your primary broker. Is that cool? It's a win-win-win-win-win. Okay, what's been going on? Australian consumer confidence or consumer inflation, 8-month low. What? So, right? Australian CPI, 3.2, 8-month low. How should a central bank respond to such information? Yeah, Fernando mentions what the MPC is talking about. But yeah, they'll probably have to raise interest rates somewhere between now and the end of 2018. Yeah, thanks for that. Yeah, thanks for the news flash. But anyways, going back to Australia, crikey. What do we do here? Yeah, inflation doesn't seem to be going up. In fact, We're basically backtracking to last year, huh? So Australian cutting interest rates makes a ton of sense, right? But notice their inflation expectation is 3.2 versus 3.6, but that's still 3 something. Here we are listening to Mark Carney, head of the Bank of England, and he says, yeah, well, we're a little off track. Maybe we can get back to the 2% goal the year after next year. What? Maybe 2018, maybe we can talk about 2%? Holy smokes. Right? So that's not good. So anyways, things are horrible in Australia, only 3.2 versus 1.2 in England, right? Trade balance out of Japan. Hey, look, 20 billion extra than they thought. It's funny, right? A billion here and a billion there, and pretty soon it adds up to real money. So, yeah, an extra 20 billion. Not bad. Could be worse. So the IEA came out with their big report. Did you download and read it? Have you adjusted your outlook for oil? Well, then why don't I do that for you? Okay, I'll do that for you. All right, I'll do it. I'll do it, huh? I'll do it. Don't worry about it. I got you. Don't worry about it. I'll do it, huh? You're welcome, Ambassador. So anyways, hey, David Trader. David Trader whom? All right, so anyways, IEA, we're still going to use a lot of energy. A lot of it's going to come, or more and more of it's going to come from renewables, and they love to pitch all this in their press releases. Yeah, so we're going to skyrocket from 3% to 4% renewable use. Wow. But how about coal and oil? Oh yeah, we're going to use tons and tons of coal and oil. But all right, but the interesting thing. Well, which David Trader? You know how many Davids I've met that trade? I think it might be a law somewhere. It must have been right out of the Bible. Right? This guy's a sheep herder, this guy's a carpenter, and hey, David, what do you do again? I'm a currency trader. All right, and Davey over there, he buys and sells something, I don't know. So anyways, the big thing is the IEA is actually coming out and telling the market to push oil prices up. What? So it's really strange that they're coming out and they're like, hey man, supplies will probably start going down by the end of the year, and next year oil prices are probably going up. Like, wow, very interesting for them to talk prices up. It's not their job. Do you understand? That I don't know. I just don't see it really as their job. That's all. That's all we need to say, right? So where is the IEA based? Do you guys know? I forget. They've moved it around over the years. IEA. So I'll show you their website if you're interested. But do you know the history of this? Why do we even have this organization? Oh, snap. Do you want you ready for your brain to increase a little bit? Is it false? It's Paris, right? Yeah. Yeah, I wasn't, for some reason I had Austria in my mind, but no, it's Paris, right? So anyways, so this organization is to combat or let's say balance world power in regards to energy to OPEC. It's the opposite of OPEC. It's the Western world's response to OPEC. Isn't that interesting? So it started after the oil crisis of 1970, where OPEC used oil as a weapon and punished the Western world, and specifically the United States, for supporting Israel. Okay? There's this, there, yeah, in using their few. Yeah, well, this is the big one. So this is, I think, 28 countries. Do you guys care about this, or should I just move on.com? You guys seem really quiet today. So you could read the new publication that came out and get, like the World Energy Outlook, and you can get all this information. And of course, if we're talking about energy, okay, if we're talking about energy, we're talking about money, because the economy uses energy. Oh, wait, you can't see the screen, right? Wait, what do you see? No, you're still looking at, okay, that's what's going on. Yeah, let's do it this way. There you go. We're talking about money, and then if energy use is going up, the economy is probably expanding, which also means more money. You understand? So when I ask you to download and read information from the IMF, for example, one of the things I tell you is, if you were a professional Forex trader running $1 billion hedge fund, you would probably have some quants working for you, right? Well, the IMF has hundreds of quants working for them. They do the research, and they give it to you for free. Why would you not pick it up? You understand? Like, it's right there. Now you have a whole macroeconomics team working for you. Well, this is very similar. So here's how the IEA essentially works. They're the ones that came up with Strategic Petroleum Reserves, SPRs. So the 28 members of the the 28 members of the IEA, or sorry, 29 members of the IEA. They should probably have a map here. How about that? What they did, here they are, right? So all these countries here that are members of the IEA, they created Strategic Petroleum Reserves. And if there's ever a problem getting oil, like, a geopolitical risk, like another OPEC using oil as a weapon, and they just say, no more. Well, these countries have stockpiled huge reserves of oil to buy us time and to figure out a plan B, to diversify our sources. All right? It's not really to prop up or keep prices down, because then you end up manipulating the market. It's just a plan B if oil supplies are disrupted. There's huge terrorist attacks in Saudi Arabia or something like that, and all of a sudden there's no more oil coming out of Saudi Arabia. Whoops! Okay. Andrew's saying, but IMF are influencers. Yeah, sure. Right? Right? Yeah, sure. Whatever. It's, just look at the data. So there's a source of, or let's say, a very useful resource for information there. So if I were me, if I wanted to be a smart currency trader, smarter than 95% of the market, because only 5% make money, right? So if I want to out hustle the 95% that fail, I would do things like download the World Energy Outlook by the International Energy Association, and find out what they're looking at for macroeconomics. Okay? That's what I would do if I were me. Oh, snap, but that's what I do. Okay, so I'm trying to lead by example here. Download it and read it, pay attention, see what you can learn, see if you can adjust. You know, when I say things like, hey, you know, what's your outlook for the currency markets over the next 6 months? And you're like, I don't really have one. What do I do, Wayne? Well, how about that? You know, I also download and read BP, British Petroleum's energy outlook, and read that. As a major international oil company that has operations in what, 50, 60 countries, they have a lot of information, and their reports, their PDFs, they're like hundreds of pages, and they're beautiful, beautiful amounts of information, not just about supply, which is interesting if you're trading oil prices, and if you're trading oil prices, you're trading things like commodity currencies, in particular Canada or Norway, right? But what about the demand side? What can we learn about demand based on what British Petroleum sees globally, based on all their employees and all their projects and the hundreds of billions of dollars at play? They do this research and tell us what their results are? Like, holy smokes. Right? Boop, boop. That's good stuff, isn't it? Even David Trader would do that. Yeah, exactly. Agreed. Let's go back to here. So anyways, okay, Norway did not adjust interest rates, still 0.5%. GDP, 1%. It's not very good, eh? Eurozone industrial production, negative number. What? How do you even have negative? Right, of course it's a reduction, but you know, you're not supposed to have a negative number when it comes to industrial production. You know, I don't know my microeconomics much, but that looked bad. All right, so anyways, boom. All right, so we got import prices. Yeah. Look, we're hoping for only 5.4%. Right, okay, negative. Initial jobless claims, great. Canadian housing prices, fine. Okay, nothing real of interest again out of our session for the USD. Okay, but you know, things are looking pretty bad out of the UK. What do people tend to do when things look pretty bad on a macro level? What's your first response? Bad, right? Risk off. What's your risk off? Yeah, move. Safe havens, thank you. Gee. Come on, Gee. All right. Yeah, yen. Yeah. So what you need to do is look at some charts, right? So I'm looking around and I don't see the yen strong. Not at the moment. Okay. Now, Kiwi yen, for example, is on that daily 21, which we talked about yesterday. Okay. But a lot of things are on the free and clear plan on the yen. So I look at that and say, meh. And then I look at the dollar and chow. I'm like, yup, there it is. Sure enough, dollar strong. Huh? So what's going on tonight or tomorrow for some? Bank of Korea, right? You like the won? You're gonna trade won? Okay. Now look at interest rates there, 1.5%. Right? versus 0.5% in Norway. Okay. And then Kuroda is talking as well. You know what? I don't have it set up, but I feel like the happy music today. How about you? Oh, it makes me feel so happy. I love Forex.Today. Thank you, Forex.Today. Oh. All right. Boom shalakalaka. Okay, so here we are, pig dog, and look at the initial response. Pound versus dollar strong, pound versus dollar weak. Nice. Look at how it's a doji. Isn't that amazing? It started here, dropped a little bit at some point, skyrocketed way up here, came all the way down, maybe made the little wick on this side, and then closed at exactly the same price that it opened an hour earlier. Nice. I wonder how much money was transferred, how much wealth was transferred in that time, right? So basically it went up to 45 and dropped again. What was that rate? Beep, 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 boo, 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 boo. There's 45 if you want to shove that in there. Just one of those things where, you know, it's just not support, so should be fairly easy to trade. You can take this out even farther. I mean, how do you make that support, right? So 44 is the bottom, 45 is the top. Do what you got to do. Yeah, David says, why would the K want to stay in with the EU? It has no growth. Well, you know, not my decision, so I'm not even going to go there. Yeah. Neutral on the 4 hour tells you nada. Look how far back this goes, man. Ciao. Daily. Okay. So I would eyeball this and I would say something like there is a reasonable potential in the next week. Okay? Oh, interesting, the Seven Sisters, huh? Yeah, yeah. Well, the interesting thing about the Seven Sisters, so what you're talking about are the first international oil companies. You know, Royal Dutch Shell, British Petroleum, Exxon, for example. And you know, they messed it all up based on greed. And that's why OPEC was created. And then OPEC took over and they messed it up based on greed. And you know, IEA was created. And now the world is somewhat balanced. When you add supply like we have recently through technology or through the removal of embargoes, okay. But the oil prices being low is not an OPEC problem. OPEC is designed to keep oil prices high. The oil prices low is an American problem. The Americans did it. And it's the strength of capitalism. You come to a capitalist and you say, "Hey, Mr. Capitalist, help me. I can't get oil. I can't get energy. I'll pay you anything, right? I'll pay you anything for a barrel of oil." Anything? anything. Huh. Well, I'm going to find a way to get you some oil, son. Right? And that's what happens. You explore the planet. You go to the ends of the earth looking for new reserves. And you develop whatever technology is required and needed. Even crazy ideas will be considered. How do you squeeze oil from a stone? Well, with enough ingenuity, and enough focus, and enough money invested, it was done. And all of a sudden, that technology and know-how became available, and it just very quickly spread across the United States like wildfire. And now oil's not a problem anymore. It's just that's it. It's not a problem anymore. Okay? In the heart of the sea, the answer, I don't think so. Not sure. No. If you got a link or something, pop it out. Oh, yeah, I watched it on a plane. Actually, I gave up on it pretty quick. Sorry. So, you know what I ended up doing? I ended up not watching it, and before I got on the plane, and I'm not kidding, like the day before, the IMF's World Economic Outlook, the WEO, came out. And I had downloaded the whole report, and that's what I was reading on the airplane instead of watching the Moby Dick movie. In fact, like no joke, true story. Hallelujah. Yeah, actually, so, at that time, wow, how do we get on this stuff? So at that time, you're talking about whaling. Whales were not killed for meat. They were killed for oil. Okay, that's where it came from. Whale oil was used for lighting. And all of a sudden, we start killing off our whales pretty quickly. But it was really the American Civil War. Oh, yeah, here we go. The American Civil War played a huge part in the end of whaling. So part of that, the whaling industry of the North was essentially embargoed, due to wartime purposes and stuff. And so the whaling ships were either used in the war or were just not safe to go out to sea, and it all stopped. And whale oil prices skyrocketed, and I think at that time they were already high because we had killed all the whales, right? So supply was low and demand was high. And we had this new thing coming out of the ground in Pennsylvania. So if you've ever heard of Quaker State Oil or Pennzoil, okay, this is all from Pennsylvania. And there was this stuff called petroleum coming out of the ground, just oozing out of the ground. And the local inhabitants for hundreds of years, maybe thousands of years, had used it and stuff, but no one really knew what to do with it. And they called it rock oil. Pretty similar to whale oil. They didn't know what to call it. So they're like, it's not oil from plants like olive oil. It's not oil from animals like whale oil. So we'll call it rock oil. Seriously, right? Great. So now we got this rock oil stuff. And then someone realizes that you can refine it a bit because it will burn, right? Not well, but it will burn. And then if you refine it, it'll burn better if you create kerosene. And who makes his fortune selling kerosene? Rockefeller. Thank you. wasn't necessarily an oil man. He was an illumination man. No, Ford was way after. Okay. So anyways, there you go. So yeah, so if that's what caught your interest, the whole part of slaughtering whales for lamp oil. Yeah, pretty interesting stuff. Without the Civil War, it probably would have just kept going on. But see, when the Civil War came on and the embargo of the whaling ships had taken place in the Northeast, people were desperate for light. I mean, think about it. What would life be like if suddenly you had no light at night? Everything would stop, right? Right? So people are desperate for an alternative. I mean, just industry even. Just, everybody needed light. So the development of kerosene to replace whale oil was a big deal, and it probably would not have happened when it did. I mean, eventually we would have just killed all the whales, right? So it probably sped up time quite a bit, and suddenly we're using kerosene developed from Pennsylvania rock oil, and it's spread internationally like wildfire. So interesting stuff. I don't know how you guys get me there, but I know a little bit about something, huh? I get my final examination today, by the way. Hey, no problem. On my so I'm going into my final exam with a 97% in the class. 97.5. Woo-wee! Based on all my homework and the midterm examination. 97.5. Yeah, it's almost an A+. So we'll see how the final goes. That's right. Boom! There's your class, Harvard. So anyways, hey, well. I got to go through the final. So I got 100% on all my papers. I wrote 9 papers. 100% on everything. Booyah! And I got 90, I think I got the 97.5 on my midterm. I missed 2.5 points. And so my final today is worth 40% of the entire class. What? I could walk out with a C+? Holy. So anyways. Yeah. Tour de force, as they say, right? So anyways, let's make some money. So I'm just showing you support and resistance, right? So it's not going up now, but it could be going up later. Okay? And that's what I'm looking at. Does it mean I need to buy now? No, it doesn't mean I need to buy now. But in a week, we might be long. Are we at support? On this level. Okay? So I need to make some decisions. Okay? Somewhere along the line, if I want to be long this next week, I kind of have to buy it today or tomorrow, right? But I'm going to need to make some decisions. Am I going to buy dips, for example? I don't know why that's there. Oh, that's a circle. Oh, that's my triangle. Okay. At some point, I'm going to have to make decisions. Am I going to buy 15-minute dips? Am I going to buy hourly dips? So on and so forth, right? So I welcome you to make decisions. Okay? Again, do you think eventually you should be buying this? And if so, what kind of entries are you going to consider? Right? So a 15-minute chart, are you buying these cycles, 5/8 crosses, higher lows, higher highs? Okay. You can see this is held here. Okay. right? You are not alone. It's not a fib. So they're not, whoever's trading this isn't doing it off of that. So anyways, make decisions. Do what you got to do, son. Get on with it, boy. Okay, that's piggy, piggy, piggy. What do you tell yourself to, Wayne, when you first start pyramiding, what would you tell yourself to stop yourself from closing the position? Well, yeah, I mean, it comes down to simply your plan, right? I mean, you just have a plan. And I like to make it expressly written so that it will manifest itself in reality. I will write down on a piece of paper and stick it on my wall so I can see it every day, like I recommend to you guys, and say, by the end of the year, I want 25 open trades that are all at break even, right? You can make it your goal and say, I'm not even trying to make pips. How would you like to hold $2.5 million and not have any risk of losing it? Okay? So how do you do that? Well, you're going to need to make 50 or 60 trades, one at a time, move the stop to break even, and hopefully by the end of the year, 25 of them will still be open. Peter says, do you take profit when things fundamentally change? Well, there's all kinds of strategies for that too. One of them is you can keep moving your stop 15 pips a day and have no limit order. Okay? So let's say you have 25 trades open and you moved your stops 15 pips each today. Now you might be up hundreds of pips each, but just today you moved your stop 15 pips on every one of them, minimal acceptable performance per trade. How many pips did you make today? Yeah, Miles, yeah. So if you're up 300 or 400 pips, moving 15 pips is not going to change the risk, right? But you're just locking in profit. Compound interest, right? So you know the quote, right? The most powerful force in the universe is compound interest. Einstein said that during a press conference. You know how the quote actually ends? People that understand that principle earn it. Those that don't, pay it. Holy snap. Wow, that's nice, huh? Yeah, boom. That's the truth right there, son. Right? You just been schooled, boy. Yeah, that's amazing, huh? Yeah, write it in Latin, Ryan. It's even more impressive. I was going to have someone come in and carve something above my office in my other house, and over the door, and I wanted it to say, the work will set you free. And I was really impressed because I found my success in Forex wasn't necessarily my trading, it was my willingness to do work. And then, of course, luckily, I find out before I hire this guy to carve it into the wall above the door. Turns out that that's what they had carved into the walls at Auschwitz. And I'm like, oh no! That would have been a very bad thing karma-wise, right? But I found the Romans had something similar, and I forgot what it was. Maximus somethingness. But yeah, I didn't want the Auschwitz, I don't know, it was just bad. Just like, oh my God, I'm so happy I didn't do that. All right, so Euro USD, what do you want to do with this? What does the 4 hour say? Down, huh? Well, that's not the most important thing in the world because the daily says up. Doesn't necessarily say up now, it says up soon, next week-ish. Could be now, probably later. That's all we know, right? Look at Ryan. Boom. Ryan's like, well, what about at the end of this cycle? Holy smokes, that sounds like a plan. I like it. What are you going to do about it, right? Yeah, you got it. So wait until then and find support. Well, everything's ideal, right? I mean, yeah, that would be ideal. I don't know if that's going to happen, but you got to be prepared and at least know what you're to look for, right? So how about you buy it here? Or you buy it we're 13 maybe? But that's so 1350. Then you got 13 is about here. And there's going to be another one around 12. I don't know, just sort of pay attention, right? Be ready and say, look, if I see this turn north, I might want to buy it based on the daily chart. Has the daily chart based on this, this move here that you see, has it made a lower low yet? No, then it's bullish. That's it. If it hasn't made a lower low, it's bullish. Let me get my drawing tool so I can make it clear. Okay? If it does this, it's over. Okay? But that hasn't happened yet, has it? So it should be, just like before. I'm gonna love you till the heaven. What, weekly jobless claims? April import prices? Canadian housing? Which news, Johnny? Yeah, I don't think any of it's that important. That's why I glossed over all of it. I don't think it'll do anything today, but we'll see. Okay. So we got to pay attention to this candle. If it does make a low below 50, it's going to be disappointing. And down to 13, it has to go up 13, otherwise forget about it. Well, Ryan, it's just that all these things have trends in play already, so I already know what the trend is, so it's no new information.
Get the weekly initial jobless claims and import price index in just a few seconds. Claims 294,000 above the 270 expected and up from 274 prior. Continuing claims 2.16 million, higher than the 2.12 million expected prior, revised slightly higher. Import price index 0.3% is 0.3 lower than expected month over month. Back month revised up 0.1 to 0.3% year over year, minus 5.7%. It's lower than the minus 5.4% expected. Back month revised up 0.1 to minus 6.1. Canada new housing price index at 0.2% month over month is 0.1 higher than expected. Year over year 2.0% is also 0.1 higher than expected. Terranet at 1.2% for April, up from 0.8% prior, with the index reading at 182, up from 179.8.
So it's one of these things like if you were watching, right? If you were watching the daily chart and you're a bull, why didn't you buy it at support? Right? There's a support pivot. We're not quite ready to do this because I would prefer to be above this zone. So I don't think I'd really truly fib it until it does something like this. So I think if you're slow as molasses on a cold Georgia morning, maybe if the market gods are smiling on you today, maybe you get something like that. Okay. But again, if you're a bull, let's go in here. Right? If you're a bull, it just, I don't know what you're doing if you're bullish and you're not kind of in here somewhere, right? 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 I mean, that's just, isn't that why we use moving averages? So like all this stuff talking about like, oh, but what about weekly jobless claims? Well, what about weekly jobless claims? What about them? Right? Like, how about a trade plan? Yeah. So it seems to me at some point you got to say, all right, I'm a bull on this. It's time to buy. How about, I don't know, the support pivot? Right? Crazy ideas like that. So if you are looking at dollar index, for example, Dixie came up into a roll reversal and turned red. But isn't that what it's supposed to do? There are some moving average crossovers and stuff, but we'll see. Oh. Okay, so that's going on. What should we do? Kind of, I'm looking around at the yens and nothing really new going on there. Moderate resistance for beast. But all these cycles have set, so nothing's really changed in the last 3-4 days. I mean, at some point, if you're a bull, you need to make decisions to buy it, but you could be waiting so long that you're buying it at resistance now because it's so late. But there's lots of cycle left. If these yens are going to fulfill their cycle on the daily Stokes, this is tons of room. CAD yen, you could have bought it yesterday at the 4-hour 21. Same thing with the Aussie yen, essentially. It wouldn't have been so clean, but it would have been fine. Pound yen, you could have bought it at the 4-hour 21. Euro yen, you could have bought it at the 4-hour 21. So it's one of these things where we set it up 3 days in advance, and then they occurred, and now they've all given full pullbacks, which we set up in advance, and many of them have occurred, and hopefully at some point, if you're going to do it, you've already done it, right? I mean, or you should be like kicking chairs in your office or something. No, Peter, it's just all we're talking about are oscillators. So here's Euro Yen 4-hour, okay? So, you know, we talked about it here. We talked about it on the daily, actually. But, okay, we talked about it sort of in here to prepare for a move on the daily to the upside. And then it's made the higher high. So it's just your job to catch the pullback to the 21, right? Yeah, but aside from that. Well, if I were to guess, I think the yens are all going to come back down at least one more time, maybe 2 more times. Yeah, but see, I don't play it like that, though. Just like, my assumption almost always is that the central bank's not going to do anything. But if they do, you should probably be trading in that direction anyways, right? So, like I've suggested for the last year, short term, I tend to day trade down and swing trade up on the yen pairs. Nick asks, Wayne, during the summer, do you generally hold long-term positions? No. I generally still try to swing trade unless it's July, and then I'll probably scalp. And then August, I will rebuild my portfolio. Oh, not hold. Yes, I generally. Wow, you got the negative. Yeah, yes. So I generally not hold. Yeah. So I'll generally the beginning of the year I unwind positions. Then sort of April, May, June, July, June, you just kind of try to swing trade, do like 100, 300 OCOs. And then July, you just scalp. If you can earn income that month, great. If not, just take the whole month off anyways. Right? August, start to rebuild the portfolio so that September, October, November, December, you make a lot of money that way. Well, it's like it's one of these things where you don't know what's going to happen. So that's why I was saying earlier, you might want to make 60 trades in one particular direction. Let's say buying British pound. And maybe out of the 60, 25 of them remain profitable. All the other ones have come down, knocked you at break even. And then Brexit happens, and somehow it's favorable to your position. Boom! You just made a killing. Or you get knocked out, break even on everything, plus the small profit that you locked in along the way. So you made a little bit of money, and it's really disappointing, but now you got to figure out what to do now that, that the news happened in an unfavorable way to you. Same thing, like, I don't know if the yen pairs are going to weaken, but I've prepared you to be ready. Right? Do you remember buying the Aussie yen together at 79? 69. At 70. I think it was 69.90. Right? So I don't know if the yen pairs are going to weaken, but I want to be prepared and ready. And if they do, I'll make a ton of money. And if I manage my risk properly, if they don't, it's no big deal. I mean, I don't make money, I don't lose money. It's not the end of the world, right? Right? So do you remember I did a video many months ago on how to get filthy, stinking rich trading? And it's probably true of anything, not just Forex, but any asset class. And the secret to getting filthy, stinking rich is not diversification. Because by definition, you're removing risk and you're balancing everything. And with balance, you're going to have just as many losers as you do winners. And that's appropriate for a lot of things. But it's not appropriate for getting filthy, stinking rich. So the other way of doing it is loading the boat. Right? The thing is, can you load the boat with one trading idea? And I asked you to do this. Come up with one trading idea. And maybe it is something like buy the British pound because 3 years from now it'll be much more valuable. Who knows? I don't know if that's true or not. But if you could put, instead of 2.5 million on it, if you could put $25 million on it, right? Let's say it is buying the British pound. So you're long pound yen, long pound dollar, long pound Swissy, short euro pound, so on and so forth, right? And just over the course of time, over the next 6 months, you just keep buying pound, buying dips, buying dips, buying dips, buying dips, moving the stops, but never taking profit, just building it up and up and up and up and up and up and up. And all of a sudden, you have $25 million worth of British pound that you own in your portfolio, and every single trade has a stop at break even or better. And then the pound skyrockets and takes off. Well, you're on your way to getting filthy, stinking rich. Or you can go back to doing 2 trades a day. You made 33 pips on this one and lost 22 on that one, and it was a really good day. Yeah. Every trade requires margin. Well, you're mark to market. Okay? So it's a unique characteristic of Forex where if your trade is profitable, okay, the profits are tradable. And if you can move your stop to break even, right, you have no risk. And so now you can take the money from the open position that's making money, and that profit is available margin. So one of the things you'll see on your account is available margin. So you got to do it one at a time. I didn't say open 25 trades today. I said over the course of time, one at a time, move your stop, add another, move your stop, add another, move a stop, add another. Oh, 2 of those got knocked out, but buy a dip, move your stop, and now you got 2 or 3 open. And it could take you months. I've spent months building positions. But let me tell you, when the yen pairs are suddenly up 3,000 pips, you want a lot of open positions open. And when do you get them? Ideally, when the yen pairs are low, not high. Okay. Yeah. Yeah, 1,001 leverage, sure. Well, how about, yeah, Nick, yeah, well, for people that are using practice accounts and stuff, sure, why not, right? It's always it's lot size relative to account size that I think is most important. So anyways. So let's go. It's been a long day. Peace on earth. May the pips be with you. May your profits be above average. Please leave comments and likes and shares and all that kind of stuff on Forex.Today. If you're watching the video on YouTube, like and subscribe and share. Oh, thank you. Yeah. Yeah. So thank you for the good luck notes for my exam. I appreciate that. Yeah, well, it's actually I'm not even going to study. Like, I don't know how do you go into a final examination and you need to study? I don't know. I don't know. I wouldn't even definitely do the mic drop. I mean, I don't know what more I could like. I don't know. So I'm ready. I just have to wait. I can walk in, boom. Ask me anything you need to know about the oil industry over the last 150 years, and so my exam is 2 questions, 2 hours, done. So, oh, thank you, Miles. Well, in 4 years I'll be done, and then I don't know what I'll do. What, PhD? Who knows? Yeah, I totally want the A+. I'm going to be really mad. One of my classes I got an A-, and I was devastated. But I told my children, though, that's how it should be. Right? There's none of this stuff like, oh, well, a B+ is still pretty good. Pretty good! You should be devastated. There's nothing worse than an A-. Right? Almost an A. Yeah, but it's a shake of a lamb's tail away from an A, but it's not an A. It's like, what could I have done? I could have, I could have added 3 extra words that somehow would have emphasized my idea better or something. I don't know. It's usually just because your professors are a-holes, right? That's usually how it is. All right, see you guys. I'll be here. Wait, is it Wednesday or Thursday? Oh boy, I don't even know. It's Thursday. Wow. So that means tomorrow I'll be at FX Street. Oh, and you said Olympics. Also, I'm a coach on a science Olympiad team, and we're going to the state championships. So yesterday I was teaching mechanical engineering and structural engineering. We were going over the math and some of that kind of stuff. So yeah, so once I'm done my final, then Saturday is the next big day, state championships. So hopefully my mechanical engineering team is going to do well. It's a lot of pressure. So yeah. So anyways, I'll see you tomorrow. fxstreet.com. Cheers.